Good morning, good afternoon, good evening, folks. It is Thursday. It is the Three Amigos. It is time for my ab workout. I appreciate these gentlemen coming to my weekly ab session. Matt, how you doing?
I'm glad it's working for you.
I didn't say it was working. I just said it's the weekly session.
It's like under like dormant 6 inches of not muscle.
Insulation, man. Insulation.
Yeah, I need it after this winter. Dude, it was 34 degrees this morning. It's almost May. This is ridiculous, but I'm doing great.
Awesome. And Dion, you still in Florida?
Howdy. Yeah, I'm doing great. I think it's 34 degrees Celsius here.
Wow.
The only difference is I can walk out my door and not need a bug net.
Everything here has like a screened in extra building around your building.
Yeah.
Now I know why.
There you go. There you go. Well, hey, gentlemen, this is going to be a 3-part series. We're recording this April 28th, basically May 1st. We're going to talk about the 2022 housing market. We're going to do it in 3 separate videos. We're first going to talk about what do we know? What are the facts? And all of us, if we hear one or the other say something that we think is an opinion, I want all us to call it, because I only want facts in video 1.
Little lumberjack's going to go for a ride.
Number 2, we're going to ask about the questions that we may have. Like, what are the things that are going on around us that we may want more data on? And then number 3, we're going to talk about the risks. So 3-part series, all 3 videos will be important. So again, video number 1, what do we know? And I will start. The average mortgage rate today is 5.25%, right? Owner-occupied, best credit, all of that. That is the best rate. So all rates go up. Investors are in the 6s, so on and so forth. What do we know? Again, rates are what they are today. They are higher than before. They're 200 basis points up. The fact is the rate is 5.25 today. What other things do we know? And Dion, you want to go first?
Sure. You're going to have to correct me on this as a fact or an opinion.
Yeah, of course.
I'm always accused of having no emotion, so I might as well mix that in here. I know deals are sitting on the MLS longer than they were 2 months ago.
Yep.
Yeah, days on market. I've already seen it from other real estate agents. I've actually had people that lit me up 6 weeks ago saying I didn't know what I was talking about. Actually, one of them apologized and said I was wrong, or they were wrong and I was right. Days on market certainly expanding, and it will go up from here. I think that's absolutely a known thing. Matt, what about you?
Inventory in some areas is starting to build. In some areas, it's really not. Like,
not
you
yet.
know, I've talked to 3 or 4, buddies, and a couple of them, they're just like, dude, it's still nuts. Prices are still going up. Still stuff is going 50,000 over ask. And then in a couple of the other markets, they're just like, yeah, we're starting to see some inventory. And I was like 3% more or like 20% more. It's like, yeah, 20% more.
Yeah.
He goes, we're starting to see some stuff. He goes, the pricing is still outrageous. And it's like, so now he's basically saying, if it's just priced right, it still sells and still sells fast. But there's some people out there that are just asking for the moon, the sun, and the stars. And they're just like, yeah, if I'm selling it, I want $750.
Yeah.
Okay. Well, that's going to sit and take $100,000 price deduction in the next 30 days if you really need to sell.
Yeah, because the right price was $650 to begin with,
Correct.
right? This is not
Correct.
last year.
Correct.
All right. So the next thing that we know mathematically to be true is affordability has been hurt, right? Affordability, I wrote about it in my first book. It's the thing that saved us in the last crisis when it got so low. It is being hurt, right? My affordability, last time I checked, it's now reported quarterly versus monthly. It has to fall. It's price, interest rates, and wages. The fact that interest rates went up 200 to 250 basis points in a 90-day window means that affordability has to go down, because that is a purchasing power of about 20 some odd percent. Nobody got 20%, or very few got 20% raises in 90 days, right? Usually rates go up slower. So impact is hidden inside wage increases. The Fed broke housing. They broke housing. Without question, affordability is going lower across the country. And in some areas, it's bananas going lower. I think I'm going to see the largest drop in affordability ever. We could go from 40 to the low 30s. It's a problem.
So I have a spreadsheet that was actually talking about with an agent. January 6th, the rate was 3.22.
Okay.
January 6th.
Mhm.
April 21st, the owner occ rate is 5.11.
Yeah.
That means you have the same purchase power. Now it's $331,000 is your purchase power.
Mhm.
In literally just January, it was 415,000.
Yeah. So affordability without question is lower.
Yes.
No
Fact.
question. Fact.
Fact.
Dion?
Okay, factually, as transactions decrease in numbers, we've seen that, lenders are becoming more aggressive, pushing more adjustable rate mortgages, targeting people with low credit scores, saying wrap up some consumer debt into this now asset-backed loan. And we're going to see more of that.
Yeah, we factually saw it. Mortgage Brokers Association yesterday said adjustable rate mortgages have doubled in volume, and they've gone up to 17% in dollar value, which I talked to Matt, the mortgage guy, yesterday. That means jumbo arms are really a big deal today. So that's, that's something to, think about going forward. So you're absolutely right. Matt, you got another one?
Fact. 10,000 mortgage brokers have lost their job in the last 60 days.
Oh, yeah.
10,000. And that's just the big ones that are reported. That's the idiots at better.com. That's, Wells Fargo, that's Citi, that's
Rocket Mortgage.
Right. That's just the big guys,
Yeah.
Over
Yeah,
10,000 mortgage brokers jobs.
Yeah, we are going to see layoffs. And I told people this was, even Robinhood, which isn't in the mortgage business per se, but they grew up, they created an infrastructure play with headcount for one environment that's no longer here. There's not enough people sitting at home day trading.
Yeah.
Right. These gambling sites, I don't know, the one that David Portnoy had, Penn National or something.
Yeah.
All of them were built and operated for one way that isn't anymore. So another fact.
Yes.
We are seeing cancellations because buyers were approved at one rate and are no longer approved. Rates moved too fast.
Yes.
And they moved too substantially. It is broken deals. So factually, both new builds and existing home sales are seeing an increase in cancellations because the buyer is simply not qualified. What else are we seeing? Dion, you got another one?
Here's a fact that has actually irritated me so much. I'm going to make a separate video on my channel about this. There's so many memes going around about why millennials are not buying houses. And then it quotes a stupid statistic about the minimum wage from 10 years ago and a minimum wage now, and the price of a house 10 years ago, the price of a house now. Last year, millennials represented the largest group of home buyers at 37%. And this year it's tracking at 43%. So for the nerds out there, with that meme, STFU, that's a fact. Millennials are buying plenty of houses.
Yeah, absolutely.
Yeah. Mike, don't ask what STFU stands for. It changes the rating of the video.
Got it. Yeah, I figured it out. I figured it out when I played it out in my head, but I was like, is that an econ stat that I don't know? Oh no, that's the other.
It's the French bed pizza index. That's what it is.
Exactly.
The indicator. Yeah.
Exactly.
Do you want me to cover what that math is to help people's brains kind of go at ease?
Sure.
So real quickly, the math on $150,000 house, somebody buying it at minimum wage back in 2012, minimum wage was $7.25 an hour. So for those people out there who think that that meme is actually real and that those numbers ever worked, they never, ever worked, ever, never did they ever work. Here are the numbers. Minimum wage, $7.25. Average mortgage rate in 2012 was 3.66%. That was the average rate in 2012. 3.5% down on a $150,000 house is $5,250. So you're going to have to basically work your net wages on a monthly basis on $7.25 an hour at 40 hours a week times 4 weeks. Your net wages are just over $1,000 a month. So in order to get to $5,250, even if you're living at your parents' house and saving almost every dime, you're probably going to be taking a year to save up. But let's get more into it. The mortgage is $144,750, which gives you a PITI. I used all the numbers from an actual property that I had. $1,037.23 is what your PITI was going to be month one when you closed after you saved up to $5,250. The only problem with that is that your payment being $1,037.23 is that your net on your entire month's income is $1,020.
Yeah.
So no one that was buying a house in 2012 was making minimum wage, period. It's a lie. The meme is a lie. It's not, the math never worked. Literally the numbers based on what Fannie and Freddie's restrictions were then, your gross needed to be about $2,500 to buy a $150,000 house. Period. End of story. I'm picking the mic up that Dion dropped. I'm redropping it. That's just math. So you can say you don't like it all you want. You can get emotional. You can start to melt. Those are facts. Those are numbers. You can argue the numbers all you want. That's all the math.
I love it when the ninth grade dropout goes math on us.
Well, this is just addition, subtraction, a little bit.
No,
of
I mean, no, I meant
okay.
I meant it sincerely. I love it. I love it.
We're okay. These numbers are good.
Yeah. So
after you do calculus, I'm out.
Yeah, I'm out. Shoot, I haven't I've taken calculus. Don't ask me to do calculus. Forget it. So any other things that we know that we want to wrap up this video? Because again, lots of opinions, lots of this, lots of that. Any other things that we know? Dion?
One last thing to wrap up for me. This is a fact. It is always a good day to buy a great deal. Still a fact.
Absolutely. Matt, you got one last one?
My last fact is, because we all love numbers and charts so much, but we actually know what to do with them, unlike most channels on YouTube, is that lumber per 1,000 board feet, when it was extremely expensive, was $1,600 per board foot, per 1,000 board feet. That was the number, $1,600 per 1,000 board feet. As of yesterday, it was trading at 906. It is almost halved, which means that it will take some time for the expensive supply to work through the supply chain. But in the next 30, 60, 90 days, you're going to stop seeing $10 2x4s, and you're going to start seeing $5.50 2x4s. If we track and have another, recessionary GDP next quarter, that will likely fall significantly again, because it's all about builder confidence. But what that does is it allows builders to say, the house didn't make sense at $450 a foot, but now that my framing costs and my shingle costs and my window costs, now that that's all changed, fact, I can build this house for a lot less. Fact, I'm a builder. I need to be building. Fact, I can lower my price.
Absolutely. Absolutely. So the last fact that I will close with, folks, is it's always about your buy box, your daily discipline. You are looking at a micro part of the market. Do your work. Only buy great deals. The market is coming to us. Investors, the market is coming to us. Owner occupants, it is tough. We only write great deals. We are comfortable writing under market offers. We can look for a motivated seller. We don't care really which house it is. We are not emotionally invested. Do the work every day. Don't get distracted. Stop looking for the boogeyman. Do the work. With that, folks, Matt, how can people find you?
Lumberjack Landlord on YouTube and Lumberjack Landlord on Instagram.
And Dion, how about you?
Right here on YouTube, Dion Talk Financial Freedom, where I'm trying to break up some memes that don't make any sense.
Awesome. Thanks, buddy.